it's funny. I was exactly the same thing, Matt. I was really surprised that y'all ranked it as low as you did. In my case, I might hold a grudge against Netflix. I sold it 12 years ago, which is like leaving. I like to say leaving $1 million on the bus. Maybe now it's $500,000 on the bus. So I'm always kind of irritable whenever I bring up Netflix because I sold it. Uh, I think part of it, why they got hit, is they had a high multiple. Netflix had a very high multiple, and this particular crash, I think there was a lot of multiple shedding. In this particular case, I don't actually think they're going to get that big multiple again. It's kind of, I look at it and I'm like, that's kind of fairly valued for their growth rate. Their growth rate is not super exciting. I don't have a lot prepared, but let me share the screen.
Here you go, Taylor. Here's right. So here's your price to sales ratio.
Yeah.
I'll do a quick percentage on the. So that's the past 3 years, right? Revenue over the trailing 12 months.
Yeah, they're growing under 20%. Their growth is not, it's not super. I don't even know if they're growing much in the U.S. Most of it's abroad, I think.
Mm-hmm.
We all know what Netflix does. They just have kind of, I don't want to say a monopoly, but they have a really strong position, a really strong brand in streaming, in how we consume movies and TV shows now. And a real big advantage over the traditional cable providers or even the network providers, where you had a set time. You had to, if you wanted to see Cheers, you had to show up Thursday at 9. Netflix gives you the power to watch any show you want, whenever you want, any movie you want, whenever you want. So it's a lot of viewer flexibility that people really like. Their big competitors, I would guess, would be Amazon, would be the main one. And I think a lot of, just speaking kind of, and I don't know that I can prove this, but I feel like a lot of people are probably kind of irritated at how many streaming services they have to subscribe to and keep up with to kind of rebuild their kind of viewing. So I assume a lot of people subscribe to 2 or 3 of these. They subscribe to Netflix. They probably have Amazon Prime. They might subscribe to Disney. I don't think Netflix is going to be that one that people cut necessarily. But I'm not particularly excited by this stock. I think it's it's a huge company already. It's $120 billion, $130 billion company. And it's gotten whacked. The multiple's gotten whacked. I think it's a strong. It's not going to disappear. It's a strong company. I would think there are more exciting growth opportunities over the next 5 years, which is why I ranked them kind of low. Why did y'all rank them so low?
Well, I can first of all, your Netflix is kind of like my Tesla. I sold Tesla in 2012. And we all know how that worked out. So I feel like I'm a little bit biased toward the downside on that stock, even if they're doing things right.
Right.
But the reason I rank Netflix kind of low is I feel like their pricing power is eroding slowly. And what I mean by that is, you mentioned that now everyone has to have 2, 3, 4 streaming services.
Mm-hmm.
I generally consider Netflix, Prime, and Disney Plus like the trio that everyone has to have.
Right, that's the core, yeah.
And then there's the one-off ones like Peacock is one of the newer ones. There's a bunch of smaller ones that are a little more niche. And then there's the live TV streaming services. If you want some live channels, you can get Sling or YouTube Premium or one like that. And before you know it, you've replaced your entire cable bill from being a cord cutter.
Yeah.
So
I'm old enough to remember when we were promised everything would be cheaper. It's
right. Back when you could just have Netflix, they had a lot more power. Like when they went from $8.99 to $12.99, everyone said, "Oh, I'm still paying $13 a month for cable." I just got a notification when I logged into Netflix that they're increasing it further to $19.99 for my plan. And now it's not just what people are missing. It's not just increasing it from 15 or whatever it was to $19.99. Now you're increasing my total cost of streaming from $80 to $85, which is a bigger deal to a lot of Americans. And I mean, Disney Plus has recently made an increase. Amazon just announced that it's increasing the price of Prime, which gets you other stuff, but even so, it's an increase. And before long, people are going to have to start and pick and choose their favorites. I'll tell you, in my household, we would get rid of Netflix before we got rid of Prime or Disney Plus. I have 2 little kids and we like free shipping. So Netflix would have to go out of the 3 if we had to make a sacrifice. So I feel like the pricing power erodes over time.
Yeah, I think that's true. I think some other things I think have happened too. I showed earlier the multiple, and Netflix now trades for about 6 times trailing 12-month sales, and that puts it basically in line with where it traded in 2017, 2016, right, somewhere in that area. And I think there was an argument that it was probably a little undervalued because it did grow tremendously. And low double-digit growth isn't terrible, right? 12, 15, 18% a year is not bad. But in a world where you have a big cash flow positive business that just has to take that cash flow and put it right back into the business to develop new content because of the competition and because it has lost pricing power to some degree, like Matt was talking about, I think it is going to be harder to continue to raise prices. And back to Taylor's point, I think there's a million better investment opportunities out there. And I think the market's going to continue to devalue Netflix as a growth story at a premium valuation, especially as interest rates start to rise and we see more of a revaluing of the market in aggregate. Matt.
Yeah, I kind of feel like Netflix is in kind of the same transition from growth to value that Apple went through like 5 years ago.
Yeah.
I kind of feel like it's at that stage of the business cycle.